Hello and welcome everyone to today's Gold and Silver Club weekly commodities review in alliance with ACM Gold, presented by myself, Phil Carr, and Nick Housey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. This live session will cover an end-of-week summary for the metals, energies, agriculture. We'll look at gold, silver, oil, natural gas and coffee. We're getting a lot of moves just this afternoon actually on particularly the soft market and also the energies as well. There's plenty to look at today, so you've joined us at a perfect time. We'll look at the top trades of the week. We'll cover live market, commentary, technical analysis. We'll be looking at the week ahead, key events looking forward, and of course answering any of your questions. So there is a questions box there, so do make sure if you've got any questions you post those in the box as well. So just looking at what has affected the markets this week, well, gold has surged to a 4-month high on safe haven buying. Gold price surged to its highest level in more than 4 months as the Middle East tensions and Portuguese banking fears sparked safe haven demand. These events were combined with the release of the FOMC, the minutes on Wednesday, which sent the US dollar tumbling to a 1-week low. The focal point for the financial markets this week was the release of the FOMC minutes, which revealed the Fed would end its quantitative easing program in October with a final cut to 15 billion. However, the documents failed to provide a timetable for their highly anticipated interest rate hike, whilst highlighting concerns by some FOMC policymakers relating to a feeling of complacency over the central bank's economic outlook. This sense of uncertainty triggering a sharp sell-off in the US dollar, driving capital into the safety of gold. So elsewhere, the Middle East was back in the spotlight again as Israel launched a military offensive on the Gaza Strip. On Thursday, Israel mobilized 20,000 soldiers for a possible ground invasion of the Gaza Strip, as opposing militants were reported to have fired over 105 rockets at Israel's cities earlier in the week. On top of events in the Middle East, concerns about the financial health of Portugal's top banks fueled safe haven demand for gold, and as the week comes to a close, among other precious metals, platinum and palladium are both headed for their 4th straight weekly gain, and silver is set to for its 6th weekly rise. So it's exciting times in the commodities sector, and we'll take a look at the charts very shortly. Before we do so, I'm Phil Carr, professional trader and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, the commodities, gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and I am a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Housey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial television. So with that, let's just take a look at the gold price at the moment. It's currently trading at $1,335 an ounce, so we're about 100 points off the weekly highs here. We'll take a look at the technical charts very shortly. Before we do so, we'll just go through some of the top trades of the week using the Gold and Silver Club's signature trading strategies. So first of all, we had a lovely sell short earlier on this week, and corn's actually continuing to break down just this morning. We can see that corn here, we had a nice 4-to-1. The risk on the trade was 60 points risk for each lot traded for 600 US dollars, risk for 270 points profit. So 2,700 US dollars profit on each lot there on corn earlier on this week on Tuesday. We also had natural gas, which broke down, had a really nice break of a major support level this week for nat gas. We're selling on here for a 75-point risk for 750 US dollars for each lot traded for a 210-point profit for 2,100 US dollars profit for a 2.5 to 1 risk to reward. And also, we had a lovely trade on gold just yesterday. We actually triggered into this on Tuesday, and we hit our profit target yesterday for 200 points for a nice breakout up to 1343 zone. We had a risk on that trade of 100 points, so 1,000 US dollars per lot traded for 200 points and $2,000 profit for a 2-to-1 on gold just yesterday. So we've had some nice moves over the course of this week, and have a look at the live technicals now. Right, the first market we will actually take a look at, I'll move over to wheat first because this is in play right now. Some of you may be short this right now, but wheat has broken a very key technical support level just this morning, 550. We came back and retested it, so this happens quite a lot when you've got a previous support level. It comes back and gets retested once it gets broken. Found resistance to that this morning, and really corn has nowhere to go but down at the moment. Corn, you can see this big V-shaped reversal pattern on the daily. I'll just zoom out on the chart here, and you can see how significant this key level of support is. Okay, so I'm just going to zoom it out, and you can see big downward trending channel here, and if I go out just to about 2011 here, there's really no key level of support here for until we come down to around the 505 level, which gives us in the region of about, let's have a look from the current price now, it's about a 320 point move. If you got in from 550, it's about a 400 point move to the downside. So wheat, we're definitely selling at this current level. We're probably going to come down to 540 now, and if we can break that, next psychological support will be the 530 zone. So wheat is definitely on for a sell short. If we take a look at natural gas, very similar setup. These sort of breaks of major support, nice V-shaped reversal are great. We got a breakdown of 4.327 on Monday. You can see we just continue to break down lower. Today we have another, looks like we're going to take out yesterday's low, another inverse hammer here. We had the natural gas storage inventories yesterday, which continue to be bearish for natural gas, and we've just broken through yesterday's low. And again, there's not really much support here at all for natural gas either. From the current levels which we're breaking, if we go back to the low of December 2013, we're sitting around those levels. There's a very weak support there, but it is providing a little bit of support. I think if we can just get a clean break below 4.100, we should get a decent move here, about 150 point move to 3.951. There really isn't much to support nat gas here at all, and well done if you did catch the sell-off that we had this week. We did highlight it on last week's webinar, that potential for a sell short, so it's moved in the region of about 200 points to the downside. Other energies to take a look at, we can take a look at light sweet crude oil and WTI crude oil here as well. What you'll find is that we did come up, retest about 2 weeks ago, the upper end of this resistance channel. We broke through support earlier on this week from 102.98. We've come down, found support at 101.58. Today's candle was relatively bearish. I'd like to see a break though just below 101.50 in order to get more downside here. You've got a pivot low taking us back down to 100.92, which is about a 50 point move if we break support. We might start finding some support around this current trend channel, which we've been in really since March. So that's the next key level I would look at, 100.92 if we continue to set off here on WTI. If we look at Brent crude oil, we did actually break support again on Brent today. We had a nice trend channel on Brent. This is the breakout that we got on it's about 2 weeks ago now, on the when we had the Iraq crisis, and you can see here that 109.37 we had a huge move to the upside here, about 332 point surge to the upside. With actually the market's come down, it's taken out that low, that pivot low of 109.37, and what you'll tend to get is when you get a big breakout like that to the upside, a huge surge. If the market comes down and takes out that previous, not just a retracement, but actually takes out the low prior to the surge, we get a continuation, and we've certainly seen that. And now what you'll see is quite a symmetrical V-shaped reversal pattern here as well. Okay, so if we just take the market from top to bottom here, and we can see we've got another quite a clean V-shaped reversal. So if we do get a break of 107.41, we could be heading lower here, or we may get some support around this zone. We've got quite a lot of consolidation going back to May here, and April. I think a lot of the move is a little bit overextended now. We've had quite a serious retracement of this, but if we can break through the 107, let's look 107.10 level, we could be due a further sell-off here, probably down to the region of the 106.31 level. Okay, on Brent, if we take a look, so that's some of the energies which have been selling short. If we take a look at some of the markets which have been doing very well this week, that certainly includes the metals. Palladium We broke out again to the upside this week to palladium. You can see we've got a really nice upward trending channel on palladium. We've come right to the upper end of that resistance. We came and pulled back yesterday, very quickly found support. So previous resistance, very common for a trending market. Once it breaks out, you've got previous resistance at the 862 level, now becoming support. That was a good buy opportunity yesterday. We seem to be forming another hammer just on the daily time frame today, so we could certainly be due more upside here and a potential breakout. If we can get back above yesterday's highs, above 877, we really could be on for the next psychological resistance around the 900 level for palladium. Otherwise, if we do break this support next week, if we come back down to the lower end of the trend channel, there could be some just quick sell short opportunities back to the lower end of the trend channel here. We really have to perform. We have seen a lot of follow through on gold and silver this week. Palladium was the strongest of the metals earlier this week, whilst we continued to consolidate on gold and silver, and then they finally followed suit later on in the week. So if we take a look at gold, we got the breakout finally yesterday, broke above 1332, spiked up to 1345. Quite low on the volumes today. We're just consolidating. We have had a little bit of a pullback. We're sitting again, giving you a good example here. Previous resistance becoming support, 1333 zone. Finding some support there, so we could just be consolidating the gains here before we get another breakout higher. Gold really, it still has some work to do. It's not the downtrend that we've had on gold for much of the last 2 years. Really, we've not out of that yet. We've had a good rally recently over the last 6 weeks or so. We've had some really good moves to the upside, particularly from the FOMC. We do need to take out these pivot highs though in order to run some stops from sell shorts. So we need to come up and break above 1354. That would be my next target here, and 1393. If we can just get a clean break above 1400, we should really start to build up some momentum and put in a base here for the gold market. We are coming into a seasonality-wise a bullish time of year at the moment on gold, so we could see further upside here if we can hold on to gains here above the 1333 level as we go into next week. But we're looking good for the time being to close above this consolidation. Similar situation on silver, got a nice breakout to the upside. We have finally, if you go and zoom out on silver, we've been in a 3-year downward trending channel, and we have broken out of that now. We're still not through this, we've not completely bottomed out here. It's still, if the market was to reverse here for silver, we've still got a lower high here if you take into account the highs that we put in on February, and then going back to October, going back to August. It's not out, silver is not out of the woods just yet. It does need to break above at the 22 level, and we would like to see a break above 22.16. For the time being, in terms of short-term levels that we're looking at, we do want to clear above this week's high, so I'd like to see silver come above the 21.57. Again, we got a nice breakout yesterday, pop up of circa about 30 points here, which was a decent little breakout for silver. You can see the average daily range is about the 30 to 40 points per day, so we got a nice surge yesterday. We seem to be holding on to the gains. You can very simply draw a very clear trend channel on silver here, just on the daily. You can see where the market has been heading, and I would be looking next key level really to take out 21.77, and then 22.16 above should really start to build up some momentum to the upside here. Otherwise, if we get a pullback here on silver, first of all, I would look at this week's resistance at 21.24 as a potential buy zone, or if we get a further break of this support zone coming down to the 20.66. Also, let's take a look at platinum. Platinum has done very well this week as well. We've almost got a double top here on platinum. You can see we spiked up to this high yesterday. We've got a nice consolidation zone here. Previous resistance is becoming support here. We've got again, sort of V-shaped reversal is starting to line up here. So I think if we can get a breakout as we go into next week, so if we just get a break above the 152 level, 1520 level next week, we could get a decent surge. I'd love to see platinum come up to the 1550 level. That would be a good psychological resistance for a 300-point gain. We've got a very strong trend channel in place on platinum here as well, and I would be looking, certainly for the time being, we seem to be closing the week pretty strong here. We've had some decent moves to the upside. Had a nice spike yesterday. Platinum couldn't quite do it. It found resistance again at 1520, but today we're finding good strong support again, so very keen to see if the metals will continue to rally into next week. Elsewhere on the softs here, cocoa has maintained this strong upward trending channel. Cocoa has been having a fantastic 2014. We are in a bit of a consolidation zone at the moment on cocoa between 3051 up to 3154. You can see the market is tending to ricochet between support and resistance. I'd like to see either a pullback to the lower end of the trend channel here to give us some buy opportunities as we maintain a very strong upward trend, so coming down to support at 3051, and then either giving us a buy from that zone in order to take it back to 3154, or a move down to the lower end of the trend channel for a buy signal on cocoa, or if we can get a break above the weekly highs at 3.154, that will give us a nice breakout on cocoa. And also the coffee market did finally break down. We've been waiting for this for quite some time on coffee. We've been stuck in a consolidation zone for the best part of about a month here on coffee throughout most of June and into July as well, but we have finally broken it and had a resolution here. You can see we've got quite a strong downward trending channel which wasn't able to actually get penetrated to the upside. There were some retests of that, found support, found resistance again at 18217, and you can see here this swing low going back to the 19th of February has now been taken out. So coffee looks good for a short at the moment. I would see this market moving potentially about another 150 points lower. Once it gets going as it is doing now, it can really start moving. Had a very bearish day yesterday, and I think coffee will continue to sell off, as will wheat. Really, the softs are a sell. Currently, the energies have been a sell, although I think we're coming into some support zones here on Brent and Brent crude oil and WTI crude oil, and the coffee and the metals have been very bullish this week. So that's what we're looking at as we come into the close this week, and what we will be anticipating as we go into next week as well. So I hope you caught some of those profits this week, but we will also give you a recap and go over the week ahead, so key events looking forward. Okay, so these are the major news announcements we need to look out for as we go into next week. So the key events we need to look at: Tuesday the 15th of July at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US core retail sales. So core retail sales, they measure the change in the total value of sales at the retail level in the US, excluding automobiles. It's an important indicator of consumer spending, also considered as a pace indicator for the US economy. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Then on Tuesday the 15th of July at 2:30 p.m. Central Africa time, 8:30 Eastern time, we have the New York Empire State Manufacturing Index. That index rates the relative level of general business conditions in New York State. A level above 0.0 indicates improving conditions, whilst the level below indicates worsening conditions. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Wednesday the 16th of July at 2:30 p.m. Central Africa time, 8:30 Eastern time, we have the US PPI. The producer price index, PPI, measures the change in the price of goods sold by manufacturers. It is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish, which will inversely affect gold and silver. Then on Thursday, the 17th of July at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. This data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It is the earliest US economic data, and week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish, again inversely affected gold and silver. Wednesday the 17th of July at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories. That data reports a number of barrels of crude oil firms have in their inventory. Commercial firms report those inventory levels, of course, to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. And Thursday, the 18th of July at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. The Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. We certainly saw this week that we had a bearish sell-off following the natural gas storage inventories as we broke support yesterday. So very key announcement if you do trade the energies. Okay, so do take a note of those key announcements for your commodity trading next week. And of course, if you would like to take your trading really to the next level and find out more about the live trading room at the Gold and Silver Club, you can request information on the Gold and Silver Club live trading room program or daily trade calls. Please go to www.jointhegoldensilverclub.com, or you can very simply contact us at our Johannesburg office. Just call +27 11 083 8403 or email us at office@thegoldensilverclub.com. And do make sure you subscribe to our newsletter. You will get a free weekly report on the precious metals, energies and agriculture. You'll also get live market analysis and prices. So if you just go to www.thegoldensilverclub.com, make sure you take advantage of that subscription. Okay, so I will leave the contact details for you on the screen there if you do want to get in touch about our upcoming workshops or how to join the live trading room and get your daily trade calls. Please do go to the website to join the Gold and Silver Club to get in touch for that. Okay, great. So with that, that will be it for today, and we look forward to see you all on the next one, and have a great weekend and good luck with your trading. Thanks everyone. We'll see you on the next one. Cheers. Bye-bye.